10 years ago, the idea of disrupting the financial system would have been a branding exercise. It would have been about coming up with a funky name like Egg and coming out with a nice interest rate product and bringing people over to sort of a slightly more consumer-friendly, fluffy, cuddly sort of world of finance where it wasn't a big, scary bank. We got a bit disillusioned with that. And the guys who founded Zopa, one of which was Richard Duval, who was also a founder of Egg. I think when we got into the barn and started to think about new ways of thinking about money, we used some very simple insights. So I was just going to share a few of those, because I think it's interesting for alternative finance. We're at this really interesting phase where we're kind of just reached our teenage years. We're a little bit, sometimes we can be really grumpy and just uncommunicative for no reason. And other times, and have massive arguments, as I think a few of us having at the moment. And at other times, we're suddenly very mature looking, and we sort of try on new clothes. And I realised I'm wearing an entirely black suit. I'm almost turning into someone from the city. I'm wearing a suit, for God's sake. And I'm wearing a suit because I was on Voice of Russia today, which is like bringing anti-consumer message to the communists, which I think is irony everywhere. So anyway, there is definitely a time where alternative finance needs to think about itself and where it comes from, and think about what are the insights that give us the edge. And I think the fundamental edge is that we understand what money is better than a bank does. This is always the frustration working in a bank, because you think these guys knew what money was, but actually they don't even see money. Banks don't have much money. They lend it and they mess about with it, but they don't actually have much money in there. And the money they do have seems to flow through their fingers really, really quickly, so they're very nervous about it. So actually, money is fundamentally a social good. It's there to serve society, not the other way around. And it's certainly not there just to be used as a sort of form of gambling and sort of regulated speculation that we have at the moment all around us. So, if you can start to think about money being something useful, then you start to think, well, what do we want to actually use money for? And I think the really good alternative finance ideas are ones that have thought through the fundamental use of money that they're trying to create, both from a point of view of the investor. So are they trying to save for something? Are they trying to invest? Do they want to try and make a little bit of extra return? What are they actually trying to use that money for in their lives? And how can I connect better with it? And on the other side of the equation is the businesses, the institutions, or the projects that you're actually trying to finance. Again, what is their use of money? How are they actually going to use this investment? And can you provide that money in such a way that it's actually useful to them? And where you find the big disconnects in the world is where that usefulness has been undermined either by sort of a kind of bureaucratic blindness or a sort of institutional view that this is how we've always done things. So that's the sort of second fundamental insight, which is, money is just made up. That's what the word fiat means. We just make it up. We all agree that we've made it up, and we all agree that we'll abide by the rules of money, but fundamentally we just got there and we made it up. It doesn't exist by dint of being money. So if you then start to think about money in terms of something you can make up, you can start to free your mind a little bit about how it works. And you might start to consider that you would use it therefore differently. And the fundamental sort of thought that money has to always operate within highly competitive markets where everyone takes a chunk out of each other starts to move away. And maybe we come into a slightly more collaborative environment where actually the movement of money and interests in the moving of money and the speculation of money disappear, and we shift more into a world where effectively the financial institutions are merely facilitating different forms of social and economic exchange between people. And that's all you're doing. It's not magic. It doesn't need a big secret society. It certainly doesn't need a big skyscraper. So that fundamental sort of two things, which is firstly, work out what people are going to use the money for. And secondly, then work out how are you going to facilitate that in a way that's ideally, if you want to make it big and scalable, pretty low cost, pretty easy to replicate, and not too complicated. And just on the final point, that for us was the basic kind of logic that we went through with abundance. All we're doing is taking people who don't really have the opportunity to invest in this sort of asset, giving them a long-term way of investing in that asset that pays them an income, something which is pretty short on the ground if you've only got £1,000 or less to invest. And on the other side, offering very patient capital to infrastructure companies. These are not high growth in their own right, but they want to build out lots and lots of solar. And they're basically saying, we will pay you that income based on the amount of energy we produce. So we de-risk it on the one side and we make it more interesting on the other. So just think about that equation. Think about the people on the one side who are giving you the money and the people on the other side who are taking it, how you can align those interests, rather than, as often happens, that the bank is actually there to play off the interest between those two parties and make a cut, as we often find in public markets. So I think that's the fundamental thing. You're only just bringing together two sets of people and make them play nice. Thank you.